Amit, I'm excited to dive in with you. So similar to the pre-show, we're just rolling. I'd love to learn a little bit about you before we talk about the business. You're in India. What were you doing prior to starting Stader Labs?
Thanks a lot for having me here, Mike. It's a pleasure to be here. Before starting in crypto, uh, pretty long journey. I went to school at IIT Madras and IIM Cal. Spent about 10 years working across strategy consulting firms, including AT Kearney, ZS Associates. And my latest experience before starting Stader was with this food tech company called Swiggy, and I used to head special projects there. Did a bunch of org transformation and org structuring before I completely dedicated myself to crypto.
And what was the initial impetus for a Stater? Did you have a spark, or was it just kind of you wanted to jump in? Oftentimes, I find when people put labs at the end of their business, it's kind of like, hey, I'm really interested in this. I'm going to figure out as I go. Was that the case, or did you have a real specific, urgent problem you wanted to solve?
No, it was a very so it was a very calculated blue sky assessment that I did before I chose the industry, crypto, and then the specific problem that we are solving here. Uh, but obviously, just like I mean, it's actually true with a lot of my crypto friends that they have one person who inspired them to actually start looking at the space. In my case, it was my current partner and co-founder, Siddharth, who always, for the past couple of years, always asked me to look at the space, pointed to the innovation that was happening in the space. And it was only, I think, towards the end of 2020 that I started taking this space seriously. Read a little bit about how the blockchains were working, what is the meaning of cryptocurrencies, how are they, how are they actually minted out of thin air, right? I started to understand some of these basic concepts towards the end of 2020, and I poured myself into the entire light papers and all the videos and materials on crypto before I completely built conviction about this space. And like after I built conviction in crypto, then it was about, hey, what do I start in crypto? There are like so many things that one can do in this space, right? Because it's just a very young industry, and there are so many things that are happening, and so many applications that are getting built day in, day out. So I had about 20 ideas. Sid and I were brainstorming 20 more, and it took us a while to zero in on staking as a problem for us to solve. And yeah, I think in March or April 2021 is when we decided to build something in the staking space, and it kind of turned into the vision that Stader is today.
Yeah. And staking, the idea behind staking being you put your crypto, you effectively make a promise on chain to put your crypto into the hands of another, or at least on chain. And typically you would do that for an exchange of yield, a retained of payback. What's the landscape of staking today? Like who's typically using staking? What companies are? What are the reasons why people would stake their coin? Those might be a few different reasons. And then where do you sort of see staking going?
Gotcha. So I think the answer is very complex. For some people, staking is just a way to make some returns on top of their assets, right? But for some people, it's actually about owning a portion of the network and participating in the governance of the network. That's more important for a lot of people. In fact, like some of the large institutions, right? They'll have to participate in the governance of the protocol. So that means they'll have to stake their tokens, right? Uh, but not, I mean, obviously, when somebody is putting their tokens on staking, that means they are inherently taking some amount of risk. So there needs to be an incentive mechanism for people to actually stake their assets, right? So to specifically double click on your question around who is staking, what is the landscape, let's actually look at the consumer segments that are there that are active in the space. To me, there are three to four major consumer segments. The first one is the retail crypto users who are familiar with their decentralized applications, use their wallets to interact with these applications, and are fairly matured in their crypto journey. Then the second set of users are these large institutions that either already own significant amount of crypto assets or actually starting to own up these big, huge sums of these crypto assets, right? That's the second segment. Then the third segment is the new retail users who are really coming to crypto on via these large mainstream exchanges and fintech applications and a lot of wallets, right? They are very new to crypto. They don't understand what staking is, but they obviously are starting to own up these blue chip crypto assets. And how do they do this? They actually need a convenient and easy to use solution within these platforms that gives them access to these staking solutions. Right? All they care about is, hey, here is where I put my money and I'm going to get like 8% returns.
Mhm.
But it's going to have a lock-in period of 21 days. But hey, here is where I put my money that is going to give me 7% returns. I don't need to go through any lock-in period. That is how simple one needs to make these solutions for them.
And it feels like we're at that point with some companies, like I'm picturing Nexo, Celsius, maybe BlockFi or Crypto.com, some of the bigger crypto projects out there make it easy for you to stake or at least earn interest yield on in your crypto in their wallets. Where do you see how does this continue on? Where does staking go from here?
Yeah, I think there are several dimensions to staking. The way I see is just putting some numbers into perspective. Staking today is a $250 billion market, addressable market. That is the amount of capital that is already staked. Now, when ETH transitions to POS, this market's already about $400 billion, right? Now, imagine like as crypto grows manifold, all of this is like into the trillions of dollars of realm, right? And just the rewards itself will run into potentially hundreds of billions of dollars. Now, a lot of innovative solutions can be built on top of rewards, just the staking rewards alone. The how do you like as a corporate, I want to stake like hundred millions of dollars of my assets and probably use my rewards to uh, get into riskier protocols like investing in newer protocols or investing in NFTs using just my rewards, right? So that's one set of innovation. The other set of innovation is liquid staking that is already happening. Then there are several other innovations that could be built around the gaming ecosystem. So how can these few billions of dollars go into powering games for people like prediction markets, no loss lotteries, all of these, right? And now how do you make these accessible to individuals in a very easy to use way? Right. So
Are,
there is this demand side explosion that will happen. Then you need to have solutions that help discovery of such products easy for retail as well as corporates.
So the first thing you mentioned there was people that receive incentive, they receive payments from their staked tokens. They're viewing that as what would be the psychology, or why would someone be willing to put that money into higher risk protocols? Is it because they view that money as like monopoly money where it's not really theirs, or some is there some, because as I understand it, say I stake Tether, if I'm making 7% on Tether, it's Tether that I'm receiving. So is there a technical reason why people are willing to put their received earnings into higher risk protocols?
So the staking that I am actually referring to is actually proof of stake staking, which is not stablecoin staking. It is like your Ethereum or a Luna or Solana staking. Your one is actually already taking high exposure to that asset, right? And then with the remaining, so he's believing in that asset, right? So he's believing in the long-term price appreciation of the asset. Now, if he wants to diversify that, with his staking rewards by redirecting those rewards in another protocol. That's quite possible, right? Like what you do is you sometimes you put a fixed deposit, you take those returns and then put them in stocks or mutual funds,
Mm.
right? So it's you protect your principal while you use your returns to kind of get into riskier assets. So that's the philosophy behind this.
Okay. And tell me about liquid staking. Where does the name come from? Why is it liquid?
Yeah. So when you're actually staking your assets, like Ethereum or Solana or Terra, Luna or any other kind of a proof of stake token, your token is actually locked for a few days. In case of Luna, it's 21 days. In case of Sol, it's about 3 days. Matic's about 7 to 9 days. And Ethereum, we know it's till the V2 ETH2 goes live. It's locked, right? So when the token is locked, you cannot use it anywhere else. So there is an innovation that has come in the industry where a representative token is given to the user when he stakes his asset, which is a proof that okay, this token can always redeem the underlying token, right? So in that case, users have an option to take this representative token and use it across the DeFi ecosystem. It's liquid because it can be liquidated at any point of time on a DEX.
Right, right. So effectively, you don't actually have to move the token itself. You can move what you could think of as a voucher or a credit, right? I'm exchanging. I mean,
Yes.
same way that the US dollar was tender that was created to represent the value of gold. Instead of me actually giving you a block of gold in exchange for, barley, I'm going to use this representative tender of the dollar, and that represents gold. So you could always go back to the bank and cash in your dollars for gold. We detached from that,
Yep.
obviously, decades ago, but that same concept applies here, where you have the real hard value, which is your Ethereum token or any protocol token, but then you have the representative. It's like a certificate on top of that when you could trade much more easily. So how do you see the growth of liquid staking affecting traders or average users in crypto?
Uh, I think there are two sides to the coin. One is obviously because these derivative tokens can be used to take further leverage in crypto. It encourages a lot of risk-taking behavior. At the same time, it frees up capital, right? Capital can be used efficiently across multiple other use cases. So it's a double-edged sword. It has its pros and cons.
Do you think that people are more reckless with liquid staking? Like if I have, the equivalent of $100 that I'm trading with in crypto, but then if I'm using liquid staking where I stake that and I'm trading the certificate, is there some sort of difference in how I'm treating that? Is that what you're getting at when you say it's a double-edged sword?
Yeah, definitely, right? But the beauty of it is, I mean, these are all free markets. Nobody is there's no invisible hand. Sorry, there's nobody who is actually controlling or influencing these markets. So people are free to exercise their will, exercise their judgment about the risk levels that they are comfortable taking, right? So I think over a period of time, markets will correct themselves. So there are always risk takers. There are always like conservative investors. So each of them will probably exercise their judgment in some of these strategies that they choose to utilize, right? So
Mm.
that's my belief. But obviously, not everyone is assessing the risks so well, right? A lot of people with capital don't understand how much risk they are taking for the amount of return they are aspiring for. So some of them burn their fingers doing some of these. But I think over a period of time they'll all learn.
Yeah. Well, I think a lot of people, I think there's there's people all across the spectrum, but there's a large number of people that I don't feel get represented appropriately that want to be calculating risks properly. They want to be smart investors, but due to a number of different reasons, they just don't know how well a job they're doing. They think they're making a good investment. They think this is a smart, calculated decision. They've watched somebody smart talk about a protocol and they trust that person. Maybe they even read the white paper and thought that was a good idea, or they just kind of follow what their friends are saying. But everyone, when they make an investment decision, they have some reason that they think this is an investment decision worth making, and it really comes down to that process. Like what is your process for validating your risk model? And I don't know. I mean, do you have thoughts on that? Do you like the idea of paying attention to smart people? Say you're a non-professional crypto investor. You have a few hours a week that you want to spend on it. Is there a tack that you like, whether it's paying attention to smart people or investing in the biggest projects or some other methodology that you think can work decently well?
I think I always index on doing my own research to the extent of ignoring to invest wisely because I just don't get the time to invest. But I mean, obviously, I follow some smart people in terms of how they're thinking, but I follow the logic and reasoning than the personality himself. So there are a lot of celebrities who say, "Hey, go invest here." I am not somebody who just falls for the larger than life personality. I basically get into the logic and reason of what they're trying to say.
Yeah, yeah, yeah. That's a good point. And some people have a big following, and they are relentlessly following the logic and the math and the technical aspect. And then the challenge is, how do you parse out the people who are really putting in the work technically versus the people who just have a platform and are yelling the next protocol? Which it's up to each person to evaluate that. But I do think, though, that
and it's just a free world, right? Like,
yeah.
People are actually giving financial advice on Twitter and stating that it's not a financial advice. It's just the way things are, and a lot of people don't have the time or the bandwidth to assess some of these things very clearly. So they
Yeah.
just end up following. Sometimes it might work, sometimes it doesn't work. It's just they'll learn over time.
Yeah. Yeah. The financial advice is a gray line because on some level, we need financial advice. If nobody is willing to share any advice, then effectively we don't have the leadership of people who know what's going on to share that with all the people who can't spend their time on it. But, people don't want to get caught legally for sharing investment advice. Where are you guys now? You started the company not that long ago, only a couple years ago, right? And you've raised a decent amount of money over multiple rounds. Can you tell me about the fundraising round so far and where you guys are at?
We started the company officially only about 8 months ago. In June is when we started the company. Sid and I have been working on this probably since April 2021, just last year. Yeah, I think I was telling about my journey into crypto, right? Once we decided that staking is a space where we want to build solutions for, it was very obvious for me and Sid to sort of try and look at how we can play the infrastructure play here in terms of simplifying people's lives about on how they go about staking. So we started building out this middleware smart contract infrastructure layer, kind of called the staking smart contracts as a service that can be deployed across several segments of users, yet will be able to perform multiple functions for these users, right? So that's the whole idea behind building Stader. Uh, our vision is to become like what AWS has become for Web2 applications. We want to be that for crypto staking applications. That is how we started envisioning Stader. And while on this journey, originally we started building on this blockchain called Terra. Not sure if you're familiar with that. The native token is Luna. One of the very interesting blockchains that we have come across in our journey. It's fascinating because of the kind of real life applications that people are building on this blockchain. Examples of savings protocol, Anchor, synthetic assets protocol called Mirror, and a lot of other young protocols are coming up. And it has got several dimensions to it. That's why this particular blockchain and the ecosystem was very appealing to us to start build our initial staking solution on. And we launched our first product towards the end of November 2021. And we have about 30, more than 30,000 unique users using our platform and about $850 million of assets that are staked with us so far.
All right. So that's a lot of progress in under a year. What are you doing that's really resonating? Is it a sales strategy? Is it purely building product and not paying any attention to marketing? I mean, what you've really struck on gold, it seems like. Is it just purely the product market fit of building, AWS for layer 2 apps out there?
I think it's a combination of both. One, we've been extremely focused on building products, trying to understand our users and their needs. That's one thing that really worked out well for us. Apart from, obviously, no business can survive without sales and marketing. Obviously, our go-to-market strategy was pure content-driven organic marketing that really worked out well for us. Kind of like educating the users about our value proposition and what we bring to the table is what really worked out well for us.
And have you raised 2 rounds of funding? Is that right?
So this is not the typical equity financing that we did. This is a sale, token sale that we did. We did the sale in stable coins. We did about 2 rounds of private sale followed by a followed by a public sale on CoinList recently.
And what's the coin that's listed on CoinList?
The coin is not yet listed. I was saying the CoinList sale.
Oh, so how did that work? So so it's a pre-coin. So the coin is not traded today, but you created a coin and then used that coin to raise money.
Yes. It's like a sale you do for future token.
Got it. Okay, so your
future tokens.
Right. So the plan is to release a token, but the token's not out yet, and you created the token so you could trade those tokens in exchange for stablecoin.
Yes.
All right. Interesting. I'm curious about this. How did you? I often ask people about this because the project that you're working on with liquid staking and all that it entails is a business in and of itself. Then you're also creating a coin that, in your case, is used for raising money, bringing capital into the business so you can fund operations. How did you make decisions when you created the token? How did you decide to not have it go public right off the bat? How many tokens to issue, whether tokens are created or destroyed, and how much to sell? Walk me through your thought process, because some of these questions aren't obvious, right?
Yeah. So the important distinction to take note of here is the token is not a security or an equity. It doesn't give any ownership in the company, right? That's an important distinction. What it does give individuals is they buy the token. If they stake the token, they get access to taking part in the decision making of the company by voting on governance proposals. They can do a bunch of things with the tokens, like they can provide liquidity in the secondary markets. So there is a set of utilities for the token that can be easily made used by people to generate further returns, right? That's one thing. And the protocol is already cash flow positive on its own. So we don't need the token proceeds to fund the protocol.
The protocol is already cash flow positive on its own. Does that mean is the
Yes.
protocol Stader Labs, or the protocol is the tokens that you're creating?
Protocol is Stader. The
Okay.
token associated with the protocol is SD token.
So
Just some differences.
why do the token then? Is it to raise extra capital to fund growth?
No, actually, token has so the entire the difference between a Web 2 economy or a Web 2 startup and a Web 3 startup is that your token holders can be your users can be your token holders and the owners of the protocol, right? So they can actually stake the token to become the owners of the protocol by participating in the decision making. That's more important for the protocol in the long run. That's the first thing. And the second thing is obviously for individuals to uh, for individuals to get hold of the tokens, there needs to be some secondary markets on the crypto space or on the exchanges where people can buy and sell these tokens, right? And one wants to hold the token to probably become an active user and participant in the protocol. So that's the reason why you need a token. Otherwise, it's like any other company, right? I as a founder can make my own independent decision.
Hmm.
But
Right.
Web 2 actually flips it upside down, right? As a token holder, you have you have the opportunity to participate in the protocol governance.
Right. Okay. So in your case, the number, or in all cases, the number of total tokens that exist are very important to token holders because that represents your share of the pie, your percentage of the total tokens that are out there. Are you fixing those tokens, or how did you make the decision on how new tokens are created or destroyed as part of that voting mechanism?
Gotcha. So the total number of tokens, the supply of the tokens is fixed.
Hmm.
It's fixed at 150 million.
Got it. Okay.
There cannot be any more tokens that can be minted.
Got it. And then so you release a private sale of the token. How do you decide how much of that 150 to offer up in the private sale?
Uh, so it was a combination of one, what was required for us to get to the product market fit, and obviously the interest among the private parties to participate in the sale. So it was a combination of the two.
Got it. Got it. So
Okay.
would you learn? I
And
mean,
obviously,
yeah.
sorry, go ahead.
Well, I was going to ask you more broadly, like how the process worked or what you learned from it. So, like, can you walk me through? So are you going to a site? Are you using a tool to create a token? Like, is there a base layer where you can mint these and then you're pushing it out to the Telegram groups? I'm just making this up, but this is what I'm curious about. Like, okay, you're saying 30-day countdown. We're selling 25% of the tokens that we're creating that are private sale, and there's incentives. Like, how did you structure the sale?
Gotcha. No, actually, so we recently created the contracts that issue tokens. So far, the token generation event hasn't happened. So the way typically tokens are created is there is a smart contract that creates a token called SD token, and yeah, that smart contract decides how many tokens should be minted and how should they be allocated across the buckets.
Gotcha. And then this.
And when it comes to the token sale process, uh, the idea initially was to bring on board really experienced value-added fund houses that can help us through the journey. The idea was not to just like sell it to the public and
Mm,
make a ton of money. That was not the intent. The intent was to like, how do we bring uh, users or potential customers of ours part of our journey? How can they like how can we make them part of our journey so that we can obviously so they can obviously help us build the product and also take the product to the market. So that was the idea.
I'm with you on that. So would it be true to say there was some article out there that was tell me if this is not the right way to think about it or if these numbers aren't right, but it says Stader has raised 4 million in October 2021 at a valuation of 50 million. Do you think of is that Pantera, Coinbase Ventures, True Ventures? Is there a separate is that how these firms invested into Stader?
Yeah, so this is, I mean, you don't call this an investment. It's called a token purchase agreement. It's like a private sale.
Mm.
So you're selling your tokens.
Got it. Okay, so assuming you have a bunch of conversations with firms like Pantera, True Ventures, etc. You must have lined up those meetings, pitched these guys. Then you say, "Hey, we're going to create we're going to create the tokens, and we're going to trade them in exchange for $50 million valuation." And you raise $4 million through that process, and then
Yep.
doing the same thing again. Did it really jump to a $450 million valuation in January? Is that right?
Yep.
Help me understand that a little bit. Like to go from 50 million to 450 in 8 months. What am I missing? That seems like a tremendous growth. What happened?
Yeah. So we did the seed sale when we were pre-product. We were two-membered people, Sid, Siddharth, and I, and we were just starting out in crypto. That was when we raised the capital, or that was when we did the first private sale with Pantera and Coinbase. And then in November, we actually launched the product. By January, I think our the total value locked or assets under management for us was about 500, $600 million. So obviously, a lot of funds were excited about the kind of growth that we have seen over the past few months. And yeah, it was heavily oversubscribed. So we ended up raising this $12.5 million as a strategic sale round.
Yeah. I mean, it sounds like on paper, one of, if not the fastest growing company I've ever seen. To get your, is that justified in your mind? Do you view like, hey, we've triangulated on the perfect product market fit? The way that I'm sensing it was very easy. Was it very easy? Was there any challenge in raising $50 million at a $500 million valuation in less than a year? Like, what went on behind the scenes?
So I think the most important thing for raising capital is one, you need to be extremely clear about the problem that you're solving.
Mm.
There are three things that very clearly somebody who is willing to back you up, either in a sale or an investment, is looking for, right? One, it is how good is the team? Are they resilient? Can they stick together through tough times? If the answer is yes, then the next question is, are they solving a real problem and how big the problem is? As a result, how big the market is. That's the second thing they would look at. Then the third thing is, has the team delivered on their promise? If the three things check out, I think that's a great signal for anybody to back an entrepreneur up.
And on the first thing, did you guys have these relationships previously? Like, what was it if you're looking at yourself from a third party, was it the experience of past companies, or what was it that you felt like, if you're, feel free to brag, but what was it about your small team that was so compelling?
I think it's the confidence that I built up after constant rejection.
From investors, just
See,
reaching out to more investors?
yeah, yes, of course. So you take a lot of rejection. People don't understand what you're building. People don't appreciate the magnitude of the problem that you're solving, right? So that gives you that gave me resilience. I just kept going, and obviously, after the first set of investors are willing to participate in the sale, then I think rest of them will follow.
Mm. How many investors did you talk to, roughly?
I think I would have spoken to more than 10 large funds
Okay. So that sounds relatively low.
before my.
So I typically think of founders talking to like 50, 60 people before they convert. So you talk to 10 and half of them say yes, right? Is that about like maybe a third of them say yes?
No, I meant before the first yes, I think I would have spoken to about
Okay.
10 people for selling our tokens.
And I'm curious, was it a cold email? Like, how did the intros go?
No, it was primarily via reference.
Okay, that usually helps. Yeah, yeah. Um, Fascinating. Yeah, I'm just curious because it's so unusual. I'm trying to learn how you did it. What are the takeaways? What advice would you share for other people who have a great product but maybe don't have the social circles? Um, yeah. Anything else?
I think a reference from an ex-founder or somebody who has done it in the past really helps because people are constantly looking for I mean even some of these funds are looking for close connects, people who can vouch for the others, right?
Mm,
So that really helps. And apart from that, it's just I think if you have the right conviction about what you're building, eventually it'll happen. There will be a bit of a struggle, but eventually it'll happen.
yeah. Were there a few protocols or companies early on that signed up, or not signed up, but started using Stader Labs that really set the example, or were early customers of yours that really helped you guys grow?
I think some of the people who participated in our private sale really helped us grow. They actually staked their capital with us on our protocol, and they gave us a lot of guidance in terms of building the products and building the solutions as well.
Got it. On the customer side, though, so tell me if this is wrong, but as I understand it, Stader Labs, you make a product that layer two applications can use to facilitate staking on their protocol. So say I'm going to go out today, I'm going to make it around the coin application on top of Ethereum, and I want to allow my users to have access to staking for my own mechanics. I would sign up with Stader Labs and deploy the underlying technological infrastructure to make that possible. And then I would pay you somehow, which I'm curious about, for that capability. Fill me in.
No, actually, it's not. That's not the only problem that we're solving. While we are starting to get into the space where we are building these staking applications for layer one protocols themselves. But that's not the primary problem we are solving. We are solving the problem of finding the right set of staking opportunities for these delegators, be it small retail delegators or enterprise or institutional delegators.
And what's an example of a delegator?
So somebody who holds a crypto POS crypto token, right? Like for example, if you hold some amount of Ethereum or Luna or Solana, right? If you want to go stake it, you'll have to go find a validator. You will have to evaluate all of these validators, and then you need to choose one, probably monitor them for their commissions and all that, and stake with them.
Mm,
Now, instead of doing all of that, you can just simply come to Stader, where we have created these extremely high performing validator baskets, and you can just choose to deposit your tokens with us.
I see. So, and when I deposit it into Stader, is Stader an intermediary, or is the token actually being deposited into the other protocol? Does that make sense?
Stader is a smart contract. Stader
Okay.
is not a custodial. It's a smart contract that does a bunch of automations.
Right. Okay. So that makes more sense. How do you guys make money? How is the business model structured?
So we actually take a commission out of the staking rewards. We charge somewhere between 3 to 10% of the staking rewards as our commissions, and that flows into the protocol's treasury.
Got it. Okay. That flows into the protocol's treasury. And that 3 to 10%, I'm sure that's mathematically determined based on the protocol that someone's staking, maybe the risk associated with that, or some incentive structure that you have.
Yep.
Are you choosing manually the protocols that are in the buckets, or is this somehow algorithmically determined which staking pools are available for people?
So at the moment, we are choosing the validators based on very objective, extremely objective criteria like the financial parameters and network quality parameters. In the long run, the idea is to let the token stakers, SD token stakers, make such decisions.
Okay. By making those decisions yourself initially today, does that act as a screen where you're screening out certain places or
Yes.
protocols that people can put their money into?
Yep.
Right. And the reason you would do that is why?
So basically, different people have different preferences when it comes to stake pools, right? So we are categorizing those validators and bucketing them into these stake pools. So in order to create these opportunities for people is why we have created this screening mechanisms. Otherwise, how will people make decision if I have a bunch of non-performing validators also in the same stake pool?
Right. And are there a few, I would imagine there's a long tail on this, where you look at the number of trades or the number of people who have staked or number of wallets that have staked, the percentage of those who have not paid back. Well, like you tell me before I embarrass myself. What are the top 3 or top 5 or the most important quantitative evaluation metrics for staking pools?
So there are two categories of metrics. One is the financial metric. Under the financial metrics, it is the percentage of commission that they're charging, the max commission that they can ever charge, and the daily changes in the commission rates. The second metrics are the network quality metrics. These are specifically like the uptime, and different blockchains have their own blockchain specific metrics like your beyond uptime, there is Oracle commits on Terra blockchain, and several such metrics play a big role in this.
And is this, if I go to Stader Labs, I'm looking at the site now, is this something that is aimed at the casual investor or institutional investor who is not crypto savvy? They're figuring, okay, they're listening to this podcast and they're like, okay, I'm kind of with you. Like you raised some money through some way of selling tokens through people, and now it's $500 million in less than a year. And then I put my money in here and you're aggregating together staking opportunities. Is this something that is targeted towards institutional investors today? Is it in the near future?
So currently, it's primarily targeted at the retail consumers, a casual investor. We are so outside of this, we are actually targeting the institutional users with private staking contracts. These are the contracts that are currently not live on our Stader Labs app, but these are the contracts that we are already taking to the market with some of the institutional investors, institutional crypto token holders, I mean.
Is that an exciting opportunity for you? Do you view it as like a side project or a main focus?
No, I think that's a very exciting market opportunity for us.
How does it vary from retail? Like from a business perspective, do you think about it as just a slight marketing change or a real serious operational change to target institutional investors?
It definitely is a serious operational change for sure.
What would go into that
Because
change?
it needs a good amount of change in the product development. It needs a significantly different go-to-market strategy and sales and marketing strategy, right? And it requires a different type of parameters that go into consideration for an institution to stake their crypto assets with us.
What are the types of things that they're typically concerned about?
Risk, how secure are the smart contracts? How many audits have been performed? Has the protocol taken adequate measures to ensure that the security is up to the highest of standards. The second thing is obviously how many individuals are staking, how much capital is there, how long has the protocol been live in the market, and how resilient it is.
And so you're the last one there. You haven't been around that long. You have gone through a few
3 months is a lot.
3 months is a
3 months is a long time in crypto.
Well, it's certainly a lot in crypto, but not really, right? I mean, I mean, it hasn't, tell me if this is wrong, but I view the crypto market as kind of like a decade old, right? Like realistically, say 2012 really started moving, like big companies started around 2014. There was a huge run up in 17, it came down. Like we've been through a few waves now. Staking is what? How long has staking been around? For 6 years? Something in that range?
But no, it's much lower than that.
Much lower?
It's just about 2 to 3 years.
2 to 3 years. Okay. Now I'm thinking if I'm an institutional investor and I'm managing a couple $1 billion and you're saying, hey, 3 months is a long time, I'm saying no way because I have a 30-year horizon. It's nice to say 3 months is a long time because it's true in relative terms to crypto, but it's not true in typical company evaluation periods. Does the auditing come in to save the day in this case, where you look at the audits that are done, or tell me about the auditing process?
Yeah, so we have actually done about 6 audits of our smart contracts so far.
Mm-hmm.
And yeah, I think auditing is a very long process in itself. First, you need to contact an auditor. You need to find a slot with him. And yeah, they go through the entire security practices. They stress test the contracts. Each audit takes about 3 to 4 weeks.
Hmm. And you went through 3 of these audits?
Yeah, overall, we have 3 different products in the market. We went through 6 audits across the 3.
Wow. Wow. And what's the team size looking like now? Like how many people working on this now?
So we have about 25 to 30 people, 60% of it being tech, 20% being marketing / business, and the remaining 20% being HR, admin, etc.
Awesome. What gets you excited, man? What are you waking up in the morning feeling like enthusiastic about building or doing?
I think I do have a lot of ideas that I want to actually build in the crypto space, and the journey is definitely exciting, right? Like obviously, I can't just jump from staking to some other idea very soon, but the thought that okay, in the next 2 3 years, okay, this is how I am going to be. This is how I am going to evolve, right? Like I get this company to a good shape. Then in the meantime, I would have started like three, four interesting ideas that I am definitely passionate about after staking. So in 3 years, this is where I imagine myself, and that keeps me going.
And do you picture those ideas
And obviously
under Stader Labs?
sorry, under Stader Labs or as a separate company, a lot of anything is possible. And obviously the journey associated with building these protocols, working with really smart people and getting things done. That's really exciting.
What other ideas come to mind when you think of exciting projects, crypto projects, or other projects?
Oh wow, lots of ideas. One of my personal favorites is to create this marketplace of large and small auditing firms, kind of like what Amazon did to small and medium sellers. I want to do to smart contract security, auditing firms and auditing individuals. Kind of build a marketplace where people can bid and choose auditors.
I would imagine the auditing.
Because the way I see it
Yeah,
is
it's
the entire market is quite disorganized.
yeah.
No price discovery, extremely like supply is crunched at the top well-known audit firms. Beyond that, none of the auditors are getting good projects. There's a huge problem of discovery. There is a problem of uh, the pricing being pricing being completely determined by the suppliers, and basically the slots being completely determined by favoritism or closeness to the protocols, etc. So quite unorganized market.
Interesting, interesting. And I imagine you stumbled across this realization after finding auditing firms yourself. Yeah.
Yes, of course.
Are,
Like
are
going
auditing
through this problem ourselves.
are auditing problems, or sorry, are auditing firms country specific, or are they country completely agnostic? Like being in India, can you get an
Uh,
Indian auditing firm, or does it have to be U.S. or somewhere else?
no, it's completely geography agnostic.
And
They
so
take
what
payment in crypto, so
they
obviously it
take,
has to
yeah.
be geography agnostic.
Well, not necessarily, right? Because there is a certain validity to the auditor, right? If I go and audit your company and I put a stamp on it, it's not valuable, right? But you got an audit, right? I could come in there and say I did an audit. It has to be valuable. That the reputational staking, so to speak, of the auditing firm has to be respected among other people in order for the credentialing of that audit to be valuable in the eyes of consumers, investors, employees. So there's oftentimes, many cases, there's a licensing. So a government body in a certain country will license an auditing firm, and that provides a sense of security or permission to do audits. Then there's a certain like cultural hierarchy of reputational assessment that goes into it as well. Like same thing in law firms. Like you'll say, "Oh, I have Cooley or Kale and Gates or some top law firm that we just know does a good job." And so it's like, you see this all the time in crypto. If you get a top law firm, it adds a sense of validity, even though that's completely subjective as to what we say is good. Same thing with investment firms, like Sequoia has been around for a long time. They have a good reputation. Do you view the opportunity more so to parse out who's good and who's not, and then allow more free market competition? I'm curious on this idea. I think it's a good one.
I think the idea can be positioned in a ton of different ways, right? Because there are multiple problems that needs to be solved. One is the discovery itself. Like as a protocol founder, I know the names of just like 4 or 5 audit firms, but there are tons of like probably thousands of firms that are providing auditing services across the globe. Some of them good, some of them bad. There's no way for me to understand till I go through an audit cycle, right? By
Yeah.
spending $20,000, maybe 40, 50,
Yeah.
$60,000 in some cases. Like,
Crazy.
why do I have to go through that pain? Where is that market that is going to give referrals
It's brilliant.
or references?
What else? What else are you thinking about? What
Right.
other ideas in crypto are begging to be solved?
Lots of them. I think stable coin for India and a lot of these Southeast Asian markets, it's completely non-existent. And building a stable coins pool across the countries and letting foreign exchange transactions and the entire forex markets being built on top of that is going to be phenomenal. So trillions of dollars of market waiting to be disrupted.
Yeah, I'm curious on India. So India recently passed some laws that acknowledge the existence of crypto and introduce regulation, which is usually a good thing as long as the regulation is reasonable. Do you have a take or a perception on the current state of the government of India's integration of crypto into society?
I think one of the positive things that the government has done recently is to introduce regulation around crypto, which is the taxation. It's definitely a great move in the positive direction because it kind of legitimizes buying, selling, and trading in cryptocurrencies, right? So that's definitely a positive move. Uh, what it is doing to the ecosystem is a lot of a lot of founders are actually starting up in the crypto space or a Web3 space. Earlier, we used to actually be scared of the Indian government.
Mm.
Now I think more and more people like. I mean, it has become like SaaS. Hasn't yet become like SaaS, but it is going to become like SaaS in the future.
Become like SaaS in the sense that anyone could start it and it's very easy and
Yeah,
yeah.
yeah. I mean, you probably know what Indian entrepreneurs did to SaaS, right? SaaS and e-commerce. So like tons of innovation, tons of companies solving global problems have mushroomed out of India. That is what will happen to Web3 world as well.
Interesting. What do you do about that? Obviously start a company in there. Are you investing in other people, other projects at this point? Or are you, yeah.
I am in whatever time that I'm getting, I am looking to definitely invest.
Mm.
More than investing, I'm passionate about building, like seeing things take shape from the seed to actually delivering value to the users is what excites me.
Yeah, yeah. No, it's incredible. I'm still dumbfounded at how fast you guys are growing, or at least how fast you've raised money. To get to a $450 million valuation in under 8 months is like breathtakingly shocking. In some ways, I would love to hear you reassure me that we're not in a bubble, because there have been companies in the past that have raised, on the order of hundreds of millions or billions of dollars before they release a product, and there's all sorts of excitement that we see in the market. And this could be, this could be gaming, it could be the internet itself, browsers, online shopping, it could be movie consumption with Quibi. Like, there's a lot of examples out there. What can you tell me to reassure me that we're not in one of these ultra high speculative bubbles, and that the valuation is justified, or maybe there's some of that, but.
For all you know, we might be in a bubble, right? Like, but the most important thing to me is the promise of the underlying technology and the paradigm shift that this revolution is bringing in, right? The bubble might crash, the bubble might burst, and all the valuations might come crashing to the floor, right? But still, the technology is promising. There are potential real value adding applications that can be built on top of this technology. That is what excites me more than the valuations, right?
I like that. Good answer. Good answer. Yeah, ultimately, over time, if we have enough smart people working on these things, we'll experience real changes in our life, not just speculative ideas, which ultimately is why people put money in the first place.
Yep. I mean, it has to go through these cycles, right? A lot of money goes into the projects. A lot of fraud projects, scam projects come in, but quantity is important.
Yeah. Yeah, hugely.
Entrepreneurs fail, they'll come back. That's the most important thing.
Yeah. Wise words, my man. Amit, what else do you want to share? Any social media pages? Obviously, Stader Labs is going to be pretty easy to find. Are you writing or tweeting or anything else you want to throw out there?
No, unfortunately, I don't have, like, these days I don't have the time to write. I would love to actually start something like basically a personal Twitter account of mine where some of the learnings that I've had through my journey, which I think were really useful for me in hindsight. And I wish I had known some of these realizations few years ago. I would love to definitely start writing about some of these or tweeting about some of these very soon.
Awesome. Well, I look forward to that. And thank you so much for hopping on today. I learned a lot about liquid staking, about the market of staking, about fundraising in crypto, and how to make an explosive round. And it was cool to hear your thoughts on some other ideas too.
Awesome.
All right, Amit.
Thanks, Mike. Thanks for having me.
Cheers.
Cheers. I really had a nice discussion.